Market Chameleons and everyone joining us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market webinar. Before we get started, please take a look at the shared disclaimer. Be aware that neither Market Chameleon, Dimitri, or myself are registered investment advisors or a broker-dealer. If you're searching for investment advice, please reach out to a licensed professional. This show, as all our shows, is for informational purposes only concerning Market Chameleon tools and products. With that, D, good Tuesday morning, my friend.
Good morning, Will. How are you?
Good.
Good morning, everyone.
I think this morning we were going to try to answer a question, right? That came from, I think it was Cincy yesterday about opening gaps maybe in SPY. Is that correct?
Yeah. Do you have the question in front of you?
Uh, I I should. Let me,
Yeah. Well, I mean, I could, I think, just maybe like paraphrase it from memory, but the question had to do with,
I got it
uh,
right here.
okay.
It was from Cincy. He said, "Is there a way to check the odds an opening gap will close?" Question. Using SPY as an example, it opens at 9:30 a.m. Eastern time, 1.5% below its previous day's close. Can we find the percent for a gap fill reversal? Was the actual question.
Yeah. So it's a good question. The idea there as well, if there's a big uh, opening gap in a security, let's say SPY, which is the market, um, and it's a large percentage move, in this case down from the previous close, maybe due to some kind of news or event where the liquidity in the market drops off large, more sellers, a large amount of sellers. Well, what happens when it opens down, a large amount? Does it tend to the stock recover by the end of the day? Does it continue lower? Does it like stay right around where it opened? And the idea is it overdone, like where the new knee-jerk reaction in the morning, does that tend to be overdone? And when the market makers or specialists step into weakness and buy the stocks, does it do the stocks then run up, or is there a continuation of selling afterwards, like what into the negative sentiment? So could only look at it from a historical perspective. We don't know, going forward, the situations could always be different. But in this situation, what we could do is use a tool we have to look up large opening gap moves. It looks at the largest 12, and we'll use SPY in our example and see what the stock tended to do afterwards. Did it recover? What are the historical odds, at least, of it recovering? We'll look at it from that perspective, see what type of insights we could get. So let's start with SPY. To go to this, you just type in the symbol up top in the search, and when I type in SPY, you will come to this summary page, and on the left-hand side, there's a menu, and we're going to go under Tools and click on Events. Okay, so now we're on this Events, and there's a drop down here to choose the historical event that we're trying to analyze and look at the stock movement. So in our situation here, we're looking at a large negative opening gap. So these are like a price-driven event, not there's events that are just, it could be economic release. It could, we have a next dividend here. It could be, different types of events. But this event we're specifically looking at is just a large liquidity move in the market at the open. Okay, that's how we define this event. So let's look at first the largest negative opening gap. So we're going to look at in the last, I think it was like 3 years or something, largest 12. Okay, that's how this is defined, and see what happened. So let's click on that. So we we selected the event, and we're going to load this report. And we have two tabs here. Let's stay on this first tab, and the first tab is looking at the stock and what the stock tended to do. And then this one, it also tracks the option strategies around this event. But let's look at the stock price. I'm gonna come down here, and here's the day of the event. Oops, sorry. And we could show more columns. So I'm gonna open this up, and you could see here the last 12. These are the dates, okay, of the event. So yesterday it made it. These are like just kind of headline news to read about. And here are the opening gaps. So yesterday it was 1.5%. We could see we had some large, even larger ones in there, 2%, 1.9%. So on average, what we're looking at here, the largest ones are negative 2.1%. Okay, so that's where the market opened relative to the previous close. Okay, that's the gap. Closed at one price in the morning, all of a sudden, it opens at a price, much lower. So what tended to happen that day? On average, where did the stock close at the end of the day? Okay, here's the open. Let's say you don't even have a position, but here's the opening price. And now you have this opening price that's down. Well, what did the stock tend to do? Did it go lower? Did it go higher? How often did it go lower? How often did it go higher? And by how much? These are the questions we're trying to ask. So if we look at the opening gap of 2.1%, we could also look at, well, on average, where did the stock close, from the previous day? And here it says 1.6%. So on average, what this is saying is that by the close, the SPY was still down, but better than at the open, right? Not as much as at the open. If we compare both of these from the previous close, well, even though on average it opened down 2.1%, by the end of the day, it was only down 1.6%. So on the average drift, so this is what the open to the close is. The average drift was up 0.5%. So we could see here, this is from the open to the close, right? So we could see the green ones are shown where it was up by the end of the day from the close, and this is down from the close, so it went lower. Okay, so 58%, this is what it's saying, 58% of our observations, the stock closed higher than the open. Okay, so that doesn't mean it went all the way back to where it was the previous day, but it closed higher than the open. Okay, 42% of the time it continued lower. So even with a large gap at the open, 42% of the time it went even lower than that. If the question was just how many times did it completely close the gap, like it opened down 1.5% and then rallied all the way back to either unchanged or higher, that's over here. So by the end of the day, 17% of the observations, the stock was actually up on the day from the previous close. Even though it opened lower, it was up. It recovered everything and even closed higher. Like it was, if you did nothing in the morning, if you owned it the previous day, it opened lower, you did nothing. By the end of the day, your position appreciated. So you could see here, like over here, we opened down 2%, but by the end of the day, the stock was up 2.6%. That was a 4.7% from the open route. And there's another time here. So not a lot of times, it won't, just because, when it closes, when it opens down that much, The odds that it recovers the whole thing are not high. They're, from the historical perspective, 17%. What about looking at the liquidity to the downside and upside? Like we could take a look at that and say, well, how much movement from the open do we go on average to the high and to the low? Is there a skew there? When it tends to open lower, is just the downside. When sell orders come in, does it drop faster and by more than when the buy orders come in? Does it go up by more? So this is the average from the opening to the high of the day. So you could see here, from the open to the high of the day yesterday was 1.3%, and these are this. So on average, from the open to the high of the day, it was an increase of 1.5%. On average, from the open to the low of the day, it was 0.9%. So the skew actually, from the perspective of, the range from the open to the high, open to the low, favors the upside. So the moves to the upside to the high seem, the higher magnitude than the low. Okay, that's what these are indicating to us. I'm going to come down here, and we also have these absolute returns. So the absolute returns look at the volatility or the magnitude of the moves. Okay, so we're looking at like the magnitude of the moves. And here we could see that, this is, these are all negative. So the magnitude of the move is 2.1% on average at the opening gap. But on the day, it's 2.3%. Okay. And if we look at the open to the close, so to the high and to the low will be these, but to the open to the close, how much volatility can we get? Because we got positives, we got negatives. So how much more movement in either direction? Like if we have the opening price, yes, it could move up, it could move down. So the average takes into account all those, but how much movement from the open to the close? Well, that's 1.8%. So you could see still a lot of volatility that day. We're talking about, yeah, we got a big gap down, but it doesn't, based on this, plus or minus 1.8%, the stock tends to move away from that opening in either direction, but this is the average 1.8. So still a lot of volatility, almost as much as, at the open. And the largest move in either direction was 4.7%. And the lowest move from the open in our observations was 0.8%, which was here. Okay. So yesterday's was also like on the lower range of the intraday vol. We could also just see if we consider this a big liquidity event, right, where there's a big gap at the open, a lot of a large movement in the stock. How does maybe the next day or coming out, like is this like a flush out, and what happens afterwards, like the next day and so forth, if we're looking at this event? So this is what is the 1 day, 2 day, 3 day after. So the 1 day after, that'll be like from the close of the day to the next close. So like close of yesterday to close of today would be like a 1 day after. And what does the stock tend to do? So here we see 64% of the time the stock is higher, 36% it's lower, but on average the return is 0. I mean, like, the lower ones, that's because it got pulled down by here, so it had the downside moves less frequent, but higher magnitude, right? Look over here, the up moves seem to be more frequent, but more muted, right? Not as aggressive as the downside moves. But it seems that, even when we go, as we go out further in time, the markets recover. 70. Here you go. 2 weeks later, 70% of those, the markets are up. Well, the SPY in this, I'm saying the markets because it's SPY is higher 2 weeks later, historically 70% of the time, for an average gain of 2.1%. Okay. If we wanted just to look at the volatility coming out, does this liquidity event create more volatility? We could see the absolute moves in either direction. If we were like looking at straddles or something, or wings, in either direction, we see that, the next day we get on average a 1.2% move, 2 days, 1.4, 3 days, 1.6, 1 week. And you could see 2 weeks on average, it's up or down, it was up or down 3.7%, with a high move of 8.2, min 0.3. So those are like, if you're looking at 1 week, 2 week straddles, where they're priced, we have some reference analytics here from a historical perspective. I'm going to come down here just to look at the median moves. I'm going to probably stop here a little, but the median moves, we have averages here that could get skewed because, sometimes you have bigger negative moves than higher, right? Or higher or bigger positive moves than negative moves. So we could take the median, which is just sorting these, like say from highs to lows, looking at the middle and saying half the observations are above or below to see if there's if there was a obvious skew in these averages. So you could see that the median moves were all positive. So meaning like half the observations were above 0.2%, half below a positive 0.2%. And even in the 2 weeks, right, the 2 week range, you see that the median move was 3.4%. Half the observations were above that, half below it. Positive versus negative, the best move was up 8.2%. The worst move down was negative 7.2%. So, you could see that, yes, there's a little bit of a positive, at least to the upside, it was a little bit bigger than to the downside over a 2 week period, but pretty close, pretty close together. You could see that there's a potential there, right? You got, let's just say around an 8%, to the extreme size, we've seen, almost an 8% move in either direction, but on average, 3.7% up or down. So I think, I'm going to stop here because we covered a lot just in this table alone. I don't want to move to the options because that will probably just take even more time than this table. We don't have that much time.
Yeah, that was awesome, D. And we were lucky since he was able to show up and he had not seen this information before. So that was really helpful. I know we have so many tools and features on Market Chameleon that it's always great when we get to go over something that we haven't gone over in a while. And yeah, that was awesome. Thanks for the question, Cincinnati. Thanks for answering it, D. Great webinar, my friend.
All right. Thanks, everyone, for joining. Stay safe out there. Have a great trading day. We hope to see you guys tomorrow.
All right. Trade in peace, everyone. Have a great day.